Hello, today we're going to talk about how much can you afford this year in buying a home? What's realistic for you? How's it going to look? And we're going to look at what an expert's got to say about it, who's done some fairly unique, kind of cool things with housing payments and calculators and things like that. You're going to be surprised about what you hear.
Today's video is very special because it answers the very important question of how much home can I afford? So my team and I, we built a custom home affordability calculator. It's completely free to use. No registration required, no sign up. I don't want any of your information. I don't want your email. I don't want anything. I just want to help people out. So I'm going to show you how it works in a moment. But first, I want to walk you through a few real life scenarios.
Okay. I want to say on this, having a calculator, a home affordability calculator is just ridiculously cool. I have to say, I am the home affordability calculator in my job. This is what I do. I help people figure out what you can do. How much can you afford? This is what I'm here to help you do. So having a tool like this could be amazing. It could be amazing. However, you do have to remember though, the tool's only as good as the user. So it's always good to make sure you have somebody on your side that knows how to help you calculate that to make sure you're looking at it correctly. Let's go back and watch.
Some of these numbers, I'm telling you, they might surprise you. Now, I want you to understand that how much home that you can afford depends a lot on the interest rates. And I want you to see for yourself. So as we go through these numbers, and please take a look down below, keep an eye out for your income level. And we're going to start, as you can see, with an 8% mortgage interest rates on a 30-year fixed loan. And we're using gross income and assuming a 10% down payments across the board. Now, I want to show you how things change with the 7% mortgage interest rates. So the numbers that you're seeing right here, this is the recommended budget. It's basically keeping your housing costs at or below 28% of your gross income. So that's considered a level where most people can stay financially comfortable. So, I mean, you can go above that amount, but that's when most people feel like it starts to get tight, financially speaking. So you may still qualify for a loan more than this amount, but you're most likely going to feel the pressure because there's not going to be much money left over for expenses or savings or emergencies. So this is what people mean when they say that someone is house poor, that all the money goes into the home and there's nothing left over for the rest of your life.
I have to say here, I agree with this guy on a lot of what he's saying so far. The percentages though, it's tough to really do the percentages. It's tough to say only X amount of your income can be used. Are we talking about net income? Are we talking about gross income? Those are important questions because when we're figuring out on the loan side and what you will qualify for, we figure it on your gross income, which is not realistic real income. And the other question is, do you have a 2-income household, but only one of you can be involved in the loan to help you purchase that home? And also the thing to really consider for you, it's not so much price. The rate is going to be what the market gleans. So comparing one rate to another, it's whatever the market gleans. That's what your rate's going to be. It's more about what can you afford on a monthly basis to pay for a house. Now let's go back and listen some more. He's on some good things.
Now, let's run the calculations with the 6% mortgage interest rate. So for all these calculations that we've done and we're going to do, we're assuming that property taxes and insurance, together they add up to 1.75% of the home's value. But I'll tell you this, if that doesn't match your situation, then I'd say no problem, because on my website with my calculator, you can adjust the property taxes, the insurance, HOA fees, etc., to reflect your actual numbers. Now, I want you to take a look at what happens when we're working with a 5% mortgage interest rates. And just a quick note, if you prefer to run these numbers based off your net income, so after taxes, then you can do that too. So I built that option into the calculator. You just check a box and it's going to switch from gross to net income automatically. Now, here are the recommended home prices using a 4% mortgage interest rates. So I'll tell you that at the time of making this video, right now, the 30-year fixed, the mortgage interest rate on that is around 7%. And a lot of people know, a lot of people have been asking, do you ever think that mortgage interest rates will ever get back down to 4%? Personally, I believe that yes, they will. However, I mean, I'm just going to be honest with you. I don't think that that's going to happen anytime soon. I would say don't expect that in 2025. But if you've seen my Great Melt-Up videos, the series, then you're going to understand why I'm saying this. All I can tell you is that there are very powerful forces at play, and over time, I think that rates are going to come back down to this level. And for our final scenario, please take a look at how much home that you can afford with a 3% mortgage interest rates. So as you can see, I mean, take a look. It's so clear of how much of an impact that mortgage interest rates cause on home affordability. So again, just look at how big of a difference it makes. You know, I'll just pick out one as an example.
Let's comment on this right now because there's a couple things that you as the consumer need to know. It's ridiculous to compare 3%, 4%, 5%, even 6% right now because that's not where rates are at. So doing a comparison like that is fine to show you how much you can save. However, what's realistic for you right now is what really counts. Look at the 7%. It's possible you could get into a 6% if you buy it, but then you have to assess, is my money being well spent? Is it really the affordability to be able to save enough to recoup the difference of that payment? Because as he said, rates are going to drop, and I totally agree with that. I don't know about 4%. I'm thinking more in the 5%, being this is my field. I believe 5% is going to be where it just slams, and that's it. It's going to go down. I do think it's going to be tough to see rates come down in 2025. I would have and had actually looked at rates coming down in the fourth quarter of 25, but then there's been some other things happening, of course, with the economy, with the tariffs and things like that have changed the whole landscape of what's possible to happen as long as those things are in place. So yes, more than likely it'll be 2026. And we'll address this as we go. That also brings up, do I wait? Do I wait till rates drop to buy? Or do I buy now? Well, that's a great question. And we'll address that. However, I'll just say this. How about you marry the house, you date the rate, because you're better off getting in now while you can and taking advantage of rates when they drop, saving that money on the payment. But we'll go back and listen in to the rest of this.
$1,000 of gross income, right? Just look at that difference in how much home that you can afford. At an 8% mortgage interest rates, your recommended budget is about $289,000. But at an interest rate of 3%, that number jumps up to $444,000. So that's a 53% increase in what you can afford just from the interest rate alone. I mean, it's pretty wild, right?
All right, guys, again, it's not relevant if the rate's not available. What relevancy does that have? This is where I completely disagree. Now, I understand what he's doing. He's talking about the difference of what you're saving, what you're able to save versus what you're paying per month. However, if those rates are not available, there's no reason to even look at it. It makes no sense at all. Should have stopped at about 6% and said, here's the difference here between 8 and 6%. So if someone is quoting you an 8% rate and you can get a 6.5%, assuming the person that's giving you the 6.5% is actually doing that and not just completely smoking crack and off the rails. I use that phrase, smoking crack. I use that because the truth is you're presenting something that does not exist here. And there's a lot of companies out there that will present things without telling you how to get there or what it costs you to get there. So the important thing is let's look at what's there now. 6, 7, 8%. Look at those numbers. Those are going to be realistic and then move ahead accordingly. If you've got an expert that's actually worth their scruples working with you as a loan officer, as a mortgage loan originator, somebody who's licensed, background check to do that, then a lot of those things are going to go to the wayside. You won't have to worry about it. They're going to have your best interest. They will explain this, answer your questions, because clearly you listening to this, you're doing your homework. You're making sure you're educating yourself. Now let's go back and hear what else he has to say about this.
All right, now I want to show you how to use my calculator. So it's completely free, no sign up, no registration. I just want to help people make smarter decisions. So we're going to walk through just one example together. So we're going to test whether the median household income in the United States of America, which is about $83,000, is enough to afford the median priced home in today's markets. So we're going to enter $83,000 as the annual gross income. And right here, you're going to see that there's a box that lets you switch to net income if you prefer to budget after taxes. But for this example, though, we're going to stick with gross income. So another thing is that you can choose to include your other debt obligations like student loans or car payments, but that part's going to be optional for you. So for this example, we're going to say that you saved $30,000 as a down payment, and you're getting a 30-year fixed mortgage with a 7% mortgage interest rates. So that's close to the current rate as of today's recording. So we're going to enter, let's just say $300 a month for property taxes and $120 a month for homeowners insurance. And we're going to leave the HOA fees blank in this example. So with these inputs, your recommended home price is about $257,966. So that is the recommended number that you're supposed to stay under to avoid financial stress, because of course you're going to have a...
I've got to stop this guy here. This is super cool calculator, I have to say. However, this is so wrong in so many places. So wrong. That payment is not realistic for that price in any world. Now, I know he's filling out things. He's putting in, the property taxes, the insurance. It's just not realistic though in any world. And the thing to consider about this too is you're watching this and you're looking at, oh, $1,500. That'd be amazing. Yeah, it really would for that price of home. It's too bad that it's going to be closer to the max purchase price that you're looking at, not the recommended budget. So when using a calculator, even though this is, like I said, super cool, as a professional in this field, been doing this a couple decades now, I've run hundreds of thousands of families through this and multi-millions of dollars of loans. It just doesn't work. It doesn't work unless you know what you're doing. So this is where you actually have to have a professional who can walk you through this calculator to even make sense of it. It's super cool calculator though. I personally would probably use this in some instances for what I do. I need to tweak it a little bit. There's a few things there that just aren't going to work, but be very cautious. This is a super cool tool. You just have to know how to use it. And the way it's being set up right now is not very functional. Let's keep listening though.
Expenses, outside of your home. So to answer the question, the median home price in the US is around $400,000 right now. And based on current interest rates, the median household income is not enough to afford that, even with the $30,000 down payment. So that gives you a clear picture of how unaffordable the housing market has become right now. Now, I want to point this out to you. This number over here, the max purchase budget. So that's what a lender will most likely approve you for. And in many cases, it's basically the maximum amount that they're going to be willing to lend to you. But I'll tell you, just because you can borrow that much doesn't mean that you should. So I'll tell you that, in fact, this number, it's usually going to be higher than your recommended budget because lenders are not concerned with whether you're going to be financially comfortable or not. Their goal is to maximize their profits, not to protect your budget or to look out for you. And I'm just trying to be honest. Okay, with that being said, I included this number because it can be helpful.
All right.
So
let's stop with that. I totally agree with what he's saying there, that loan officers, unfortunately, we get paid like a realtor. A realtor gets paid a percentage of the deal. We are commissionable people. Majority of us are actually 100% commission people. We're W-2 commissionable people. That means that I make X amount off every deal. So yes, we want to maximize our dollars from each deal. However, that doesn't mean you have to maximize your buying power and convince you that's what you have to do. There are a lot of loan officers doing that. And that's why I wanted to interject here on what he's talking about. This maximum payment purchase a budget payment that he's got up there, but is not realistic for that house price. Again, way off, actually, just completely way off. But here's the question, and here's how you know if you're working with a loan officer, which is the key here, a mortgage loan originator. Here's how you know if you're working with somebody who's worth anything, that's going to look out for your back. Because the truth is, as an originator, it's not about me. It's about you. It's about your family. It's about putting you into a home that you want, that you can afford, that you're going to enjoy, and still have money to go out and spend $100 at McDonald's for 5 of you. I mean, it's getting that bad. But no, just to go have some fun and maybe do a little travel and take a day trip somewhere and be able to have the money to do that, yet living in a home that you want, that you can afford, that you enjoy. So here's the question. This is it, the $1 million question for you. All right, Mr. Loan Officer, we've worked on my budget. You've seen it. You know what I can afford. You know what I can qualify for as well. What do I do? And here's the magic question. Well, buyer, what's the most you're willing to spend monthly, including taxes and insurance, on a home? Worst case, max out. What's the most you're willing to spend to purchase a home and still have money to do what you want to do? And what is your budget? If you haven't figured out what your budget is, I can't tell you that. That's your money. I can tell you what you can qualify for. I can coach you percentages and make it sound really fancy. The truth, coming right down to it, is, what do you and your family feel comfortable that you feel that you can afford each and every month to buy a home? And then we work backwards to make sure we find the maximum price you can get for that so that you know what you're in for. You know, if you want a $250,000 house and you can afford a $2,200 payment, which is where I live, realistic. Okay. If you can afford that, you want that, we'll get you in there. That's your budget. That's where you're at. That's where you got to stick in. That's your sweet spot for you and your family. Again, the question is that you're going to get asked, if the loan officer's worth anything, what is the most you can afford, including taxes and insurance, to purchase a home? Think about that. Think about your budget. When you go into this, think about your budget. Think about what you believe you can afford. It's not about the percentage of any numbers. It's about you and your family, what you can afford. Now let's go back to the calculator and watch what happens.
For example, if you're confident that your income is going to increase meaningfully over the next few years, and you're considering buying a bit over your recommended range, if that's going to be the case, then this is going to be useful to know. Like, what's the maximum that you'd qualify for right now? So just keep that in mind. But again, that is a big assumption, and you need to be realistic about your future income. Now, I want to be very upfront with you about this. The budgets that I've shown you, they've included property taxes and insurance. And again, they're estimated at 1.75% of the home's value. That's a combination of the two. But those numbers, they don't include everything else. And it's important to understand that you're going to have other expenses for your home. So here are the common hidden costs that can catch new homeowners off guard. Of course, there's going to be maintenance, and from experience, I'll tell you that if you're going to have a roof repair and that's not going to be covered by insurance, that can be very expensive. Or HVAC replacements and even plumbing issues. And the unexpected expenses. If, for example, this happened to me a few years back, like I got hit with a special assessment for a large amount. Like I had no idea that that was coming, like no warning, no anticipation of that. And it just really took me off guard. And other unexpected expenses, I mean, with the utilities or system failures or even major appliances just going bad, whatever they may be. Of course, you have your general repairs over time. And of course, you have the closing costs. When I look at the closing costs just line by line, those line items, it's just, some of them just is frustrating to see them. And the moving expenses, I'm telling you that if you haven't moved recently in the past few years, it is just astronomically much more expensive compared to if you moved 5 years ago, 10 years ago. And the property tax increase, I'm sure I'm not the only one. It just feels like it just goes up faster and faster, more and more every single year. And it's just out of control. It's ridiculous. It's the same thing with the insurance premium hikes, especially if you're in an area that's prone to weather events. Okay, so these are real costs and they can add up really fast. That's why it's so important to stay below your max budget so that you have room to handle these things, even apart from the other aspects outside of your home. Okay, so what do you do?
We need to talk about this. I totally agree. The expenses, the things that come up and all of that. Again, we're talking about max budget. That's not something we can percentagize as loan officers for you. That's not something I can percentagize for you. That's something that you have to understand. If you want to do a fail-safe rule as far as a percentage of your income, we can talk about that. But let's put those real life numbers in there. What are you really making? What are you spending for rent? And do you have money left over now? And also the down payments he's talking about, if you're a first-time home buyer, there's a very small few that have less or have more than the minimum down to get into a home. And a lot of people using down payment assistance, which also cuts into what you can afford monthly because those programs are not saving you money on your payments. They're saving you money out of your pocket. But down payments and rolling those numbers, that is for another day. And I can help you do that. It's just one of those things here. When you're budgeting, max budget is what your decision is that you're comfortable with on a max budget. It's not a percentage of your income. I can percentagize and qualify you for a lot more than what he's even calculating in there in real life using your gross income. And most people don't want that unless they have champagne taste on a beer budget, or they have a spouse that for some reason can't be on the loan. You're only using one household income. That comes into play. So make sure that you are budgeting for these expenses. Make sure that when you're putting this together, that your budget includes that. And of course, taxes and insurance are going up. It's one of those things. I've said marry the house and date the rate when you're looking ahead on buying a home, because when rates do drop and you refinance and you come back to me to do that refinance, which is what you should do since, we're working together and I'm going to hang with you and make sure this is about your family, not about my pocketbook. we're going to refinance you and drop that payment down. And it's going to drop it down a nice chunk, a few $100. It could mean the difference if you being able to buy more than you thought you could now, knowing that rates are eventually going to drop. Everyone is looking at it like that. And once they do, taking advantage of that. Then let's go back and look at this, what to do.
If you're not ready to buy a home yet. So I'll tell you that if you cannot afford to buy a home right now, you are not alone. Millions of Americans are in the same situation. So as I mentioned earlier, the median household income is not enough to afford the median priced home in the US. So that's a tough reality, but it's the one that we're living in right now. Okay, now I just want to be practical. If you're not ready to buy yet, here are a few smart ways to prepare. So listen, I just want to tell you that I'm not saying these things to be insensitive. Like, they seem straightforward. I'm saying them because they actually work. So these are the steps that's going to put you in a stronger position when the time is right. So of course, you can save more for a down payment to reduce your future mortgage and improve your loan options. And you can increase your income. You can wait for better market conditions like lower interest rates or a correction in home prices, or consider shared purchase options, such as buying with a family member or partner to combine resources. Now, I just want to end with this. Please take the recommended budget seriously. So I've seen, like, with my own eyes, my family, friends, my clients push beyond their limits. And I'm telling you, it rarely ends.
Let's back up to that last screen. If you're not ready to buy, let's look at this. There's so much here. There's so much here. I could spend days just on this, talking about the options or what you should and should not do. This is huge. What do you do if you're not ready to buy? Well, if you haven't talked to a loan officer, you don't know if you're really ready to buy or not. You can make a decision personally, say, well, we're not comfortable in buying right now. That's fine. Talk to a loan officer, have them run the numbers. It may change your comfortability because you're going to realize that, oh my gosh, this $1,500 of rent I'm paying, I could be owning a home for the same thing that I'm going to like more and be able to paint my own colors and do all this stuff. Yeah, we have to save for the unknown things that are going to happen and all this. It's all part of it. It's all part of the budget we're talking about. But let's look at this. Saving more for down payment. Did you know every $1,000 you put down in this market only saves you $7? $7. That's a Big Mac sandwich. That's a Big Mac sandwich. Just a sandwich, not the meal. Just a sandwich. It's a Big Mac sandwich right there. I'm just saying. What is that really doing? Putting extra money down, if you've got it, is fine. It's great. If you're selling a house and you've got a ton of equity, which a lot of people do right now because of the way prices went whoop a few years ago, now they've solidified a little bit. They got a ton of equity. It may be the only way to get you into the home that you want. However, if it's $7 for every 1,000 you put in there, we could find better ways to make that $1,000 create $7 for you. So again, that's where a loan officer comes in that's really looking out for you, really trying to make sure that you're positioning yourself for the future. Increases of income, that's legit. If you got a raise coming in 6 months, but you want to buy now, your lease is getting up, you want to buy, you don't want to rent for another year. And when rates drop, by the way, a little carry here, when rates drop, what do you think prices are going to do? They're going to go up. It's going to be a feeding frenzy in this bad boy. So do you want to buy now with a little higher rate, a good price, and ride that upswing? Let's do that again on those values, because then you could refinance using the value that you've already gained in the house that you didn't have to put down as a down payment, by the way, because you have increased income. You were able, you thought you'd be able to buy, and now you've got a payment lower that was more of in line with what you wanted on your previous income. You can back that up and play it again if you want to. I said that kind of fast. There's so much here, though, like I said, through just this slide. It's been years on this. Seems like, okay, maybe not years, couple minutes. We can spend a few minutes on this. Waiting for better market conditions. That's got its ups and downs. The better market conditions could be there's no homes in the market that you want. That's a market condition. It's a condition of the market right here where I'm at. It's a condition of the market. There's not enough of homes that people want on the market. So when they do come on, bam, people trying to get in there and snatch that thing, or they back out completely and have this phrase, what if you're not ready to buy? Actually, is it you're not ready to buy, or you're not happy with what you're seeing? Big, huge difference, which is why you want to talk to me as an MLO, as KansasLoanMan. You want to talk to me and figure out what's best for you. If you wait on the market conditions, though, like I've said, as rates come down, I feel like a weatherman, as rates come down, prices are coming up. That's exactly what's going to happen. And then you end up paying 10% more. Talked about that 10% down payment. Remember that? You're paying 10% more for the same house you could have purchased at the higher rate and refinanced when they drop, and you have all that equity sitting right there. Oh, the skies open up, the sun comes down. It's sitting there just waiting on you if you're willing to put yourself out there in this market. Considering a shared purchase option, considering that's not a bad thing if you want to live with your family. I've got a friend of mine that she's like, hey, if I had an 8-bedroom house, bam, come on and move in. We love you. We love our family. We always have a great time. We want to live together. Hey, I'm happy for you. I personally want my space with my family, and my own people. So we can have a little bit of separation there, but I love my family. Don't get me wrong. I just don't know that I could do that myself. And I think some people can, some people can't. But considering shared purchase options, there's also multifamily type situations, homes that you can go with a family member and buy, and you actually have your own size, but yet you still live together on the same house unit, so to speak. So again, so many things there. I'm not going to continue to beat this horse on this slide. However, there's just a plethora of amazing options and information there. And you have to kind of, I'm going to say this, you have to throw out, what do you do if you're not ready to buy? You know what you do? You talk to a loan officer that's got your back, that's going to make sure they're going to help you and help you answer the questions that you're asking to say, I'm not ready to buy. Because I don't believe for most people it's I'm not ready to buy. I think it's I'm not comfortable with the conditions. So we've got to talk through that. I don't care if you buy now or next year. Personally, it doesn't matter to me. I'm just here to provide you information because what did I say about me? It's not about me. It's about you and your family and getting you where you want to be, putting you in a position to where your family's going to be comfortable living, doing what they want to do, playing in the backyard, jumping on the trampoline, swinging on the swing set, whatever it might be, riding the bikes down the cul-de-sac if you want. It's about you getting you where you want to be. Let's go ahead and finish what this guy's got to say. I like what he's done overall.
Recommended budget seriously. So I've seen, like, with my own eyes, my family, friends, my clients push beyond their limits. And I'm telling you, it rarely ends well. So some became overwhelmed, stressed out. A lot of people became miserable. And I've seen the situations where people have lost their homes because they took on more than they could handle. So please be smart with your finances. I want to see you build a life that you can enjoy, not one where your home becomes a burden. So don't let a lender's approval make the decision for you. Stick to what's sustainable and avoid becoming house poor. And most importantly, just stay in control of your financial future. So if you found this information helpful, please head over to my website.
I like what he's saying. I like this. It is about you. And what he had to say about the loan officer, what he had to say about the loan officer saying, well, it's not about what the loan officer can max approve you for. 100% agree. Too many loan officers are doing that. They're saying, oh, you buy a $350,000 house. What they don't tell you is that's a $3,200 payment. Do you want a $3,200 payment or do you want a $2,000 payment? Big difference in the type of house you're going to buy. I get that all the time. People come in my door. Well, they told me I could buy $300,000, but I never knew what I was going to pay. That's a problem. So what's the problem there? If they have a calculator like this, it could help them. However, they have to know how to use it. I'm not sure that you're even going to really know how to use that because it's percentagizing your income to tell you what a payment's going to be. The other thing is there was an actual part of the payment that was missing completely from that calculator. And I'm not going to get really into it. I just want to touch on this PMI. I'll throw that out there. If you know what that is, great. If you don't, get a hold of me. PMI was not in there. That's a part of your mortgage payment when you don't have 20% down in every loan type, unless you're a veteran. It's just one of those things. You can only trust a calculator with the person that's using it if you know what you're doing to use it. It was a really amazing tool overall, though. I love the concept of throwing your money in there and trying to figure out a percentage of what you should be paying for a home. The real question, though, and this is where it comes back to working with a loan officer. If your loan officer has pre-qualified you, pre-approved you for an amount, and they have not told you what that payment is, run, sprint, swim, dive, do whatever, fly away quickly, because the loan officer is not having your best interest in mind, or they're just not coherent of what it really means to help you buy a home. So yeah, pay attention to your budget. Pay attention to those things. I like this overall. There was some great information in here. However, it's good to make sure you're working with a loan officer that can help walk you through this and not pressure you to do anything that you don't want to do, but allow them to give you the information. And you can information I give you, you can check it out. You can get a mortgage calculator and check that bad boy out, and it's going to be dead on. If we've provided the proper information to you, you can buy a house. So now I want to challenge you. Talk to a licensed loan originator. And by the way, I can do this anywhere in the country. Get a hold of me. My information's on the channel. You've got my contact information right there. Like, subscribe, share, do all of that stuff. However you want to get a hold of me and talk about it, reach out to me. I will make myself available to you to make sure that you're getting the best options for you and your family, because it's all about you. Thanks everybody for checking us out. Thanks for listening, and we'll see you soon. Hey, if you enjoyed today's video, you're going to enjoy the next one's coming too. Click here. Pow.